Hi everyone, welcome to my channel. I'm Doris and today I want to talk about my account. So my account shorted $480 today and I sold short 2 stocks. And one important thing that I want to mention about the market is that I discovered an important turning point for stocks to drop. So you can see that today I gained $480. And these are the stocks that I currently have positioned in. This one is shorting Nasdaq, and this one is shorting real estate, and it's shorting 3 times ETF. Talking about the trend of the market, I want to first take a look at the US government bond 10-year interest rate yield minus 3 months yield. So this is the graph for that since 1982. There are several instances where the difference between the interest rate is negative. The lowest point for the first low was June 9th, 1989, and that was negative 0.35%. And what happened the next year to Nasdaq Composite is that it dropped from 487 to 323, and that's a negative 33.7%. The second time the lowest point happened was January 2nd, 2001, and that was negative 0.95%. And the following year, Nasdaq Composite dropped from 2,892 to 1,108, and that's a negative 78%. And the third time the inversion happened was on 2007, and the lowest point was on October 31st, 2007, and that was negative 0.64%. And the following year, Nasdaq Composite dropped from 2,861 to 1,288, and that's a negative 55%. And now we can see what's happening to here. On December 15th, 2022, the lowest point was negative 0.84%, and that was negative 0.84%. And what do you think will happen to the future? Looking at the market today, investors are trading recession. Looking at the market today, we can see that it decreased across all industries. The Dow Jones closed down 348.99 points, or 105% to 33,027.49 points. The Nasdaq Composite fell 233.25 points, or 2.18% to 10,476.12 points. S&P 500 fell 56.05 points, or 1.45% to 3,829.39 points. On Thursday, the U.S. Department of Labor reported that as of December 17th, the number of initial jobless claims in the United States was 216,000. The expected number was 222,000 and 211,000 previously. The U.S. Department of Commerce reported that the quarterly annualized rate of U.S. real GDP in the third quarter was 3.2% up from 2.9%, compared with a previous reading of 2.9%. The increase in growth largely reflects an upward revision to consumer spending, the main driver of the economy. Consumer spending in the third quarter increased 2.3% from a previously reported 1.7%, as spending on services was stronger than previously reported. Consumption remains strong despite rising interest rates. Annualized quarterly rate of the core PCE price index was 4.7%. And is expected to be 4.6%, and the previous value was 4.6%. The real personal consumption expenditure quarter rate was 2.3%, expected to be 1.7%, and the previous value was 1.7%. David Tepper, a prominent hedge fund manager and founder of Appaloosa Management Company, said, "I tend to short the US stock market when so many people and so many central banks have made it clear what they will do next. The so-called up-down analysis doesn't make sense to me." Sam Stovall, chief investment strategist at CFRA Research, Thursday's latest set of data shows the US economy's resilience adding to market concerns that the Fed will stick to an aggressive tightening policy. Rate-sensitive growth stocks fell, with technology and consumer discretionary leading losses among the S&P 500's 11 major subsectors. The GDP data beat a lot of people's expectations, Stovall said. The market is worried that the economy won't cool down easily, and is fighting a fight that could require the Fed to remain hawkish and keep interest rates higher for longer. Shorting U.S. stocks will fetch more than $300 billion this year, the highest since 2018, as U.S. stocks fall. Short sellers have been rewarded by betting on short stocks and other large growth stocks that have been market leaders for years. According to analytics firm S3 Partners, short sellers, investors who bet on a fall in a company's stock price, has $303.7 billion in realized and unrealized gains, a 4-quarter increase from 2018, their last profitable year. That equates to an average short total return of 31.2% for the year on $973.6 billion, according to S3 Partners. In terms of dollar earnings, a short bet on Tesla topped the list, with investors earning $15 billion in realized and unrealized gains on an estimated $19.3 billion bet on the stock. Shares of electric car makers are down about 60% so far this year. Company's meteoric rise over the past few years has caused many bearish investors. That's all for today. Thank you for listening. Don't forget to press subscribe and like. Thank you. See you next episode.